got Ajay Kanwal, the Managing Director and CEO of the bank, right here with us. Thank you so much for taking time out and joining in. Let's just talk a little bit about, how business has been shaping up for the bank as of now. In light of the fact that there has been a pretty stellar growth in terms of your overall profit, which has grown in about double digits, what is your projection in terms of your overall financial position?
So thanks. So I think first, very importantly, is that where the bank is today, the bank's balance sheet over the last 5 years, like you mentioned, has become very profitable. We have made sure that the bank balance sheet now incrementally reflects that of a customer. And when I say customer, it's largely an individual consumer, whether in salaried or in business, or an MSME customer. And the big change that has happened really is it's moved towards more housing, more secured loans, and has become less of unsecured loans. So that's number one. In terms of future growth, honestly, all the businesses we are in, so we are in the underserved market. Underserved markets, the growth rates are anything in the 20 plus range. So I do think that we will meet the growth rates that you can expect from the industry. Sorry.
Sorry,
please.
no, please
no,
go
please
ahead.
go ahead.
No, finish your point.
I'm done.
Okay. No, I was just talking about, how it's been a conscious strategy for you to try and change your loan mix. Tell me, is that going to be an effort going forward as well, wherein there will be lesser of unsecured loans and more, like you said, to try and replicate the customer of today?
So, absolutely. The idea when we began a bank really was we need to make sure the consumer, in our case, an underserved consumer, who is not very comfortable going with banks, and probably dealing with multiple entities for loans, right?
Yeah.
Where he goes for housing loan will be different from where he approaches for a car loan to a gold loan, etc. Why don't we create under one roof?
The one-stop shop.
The one-stop shop. Importantly, give him digital answers, which he could choose. So it's not a forced digital answer, but a digital answer the customer chooses. And third, let's make sure that he feels comfortable walking in. Because most people are like, how do I go to a bank? Whom do I talk to? And unless you don't know somebody in a bank, you're really not comfortable approaching the bank. I just want to rewind back on the digital piece.
Sure.
So while we have digitization, which I think is best in class, we have made sure that if you do call up the call center, you are 90% going to talk to a person. Because we do know that IVRs don't please anyone, right? So we try to make sure we are doing what is most intuitive for a consumer. What would a consumer really like? Like when we keep holding on to press 1, press 2, we don't like it, right? So why would any of my customers like it? So everything is around digitization, service. Bank's balance sheet should reflect that of a consumer and make sure the customer is very comfortable coming to the bank.
But today, in today's day and age, as consolidating as the banking industry may have become, but there are still a plethora of banks out there, especially in the segment that you're competing with. What would you say is Jana Bank's niche? How is it that you stand out?
So I must say that if you look at the challenge both in India and globally, the penetration of credit in the middle to bottom end of the economy is always very low. And that problem everybody enjoys. And that comes from 2 or 3 factors. One is the ticket sizes are small.
Yeah.
So obviously, the income you make per ticket is a challenge. Second, understanding incomes is a challenge. And 3, the formalization of credit, which means customers are not really paying you always through bank accounts. Sometimes you have to go and collect. The customer education has to be higher. So I think from a competitive angle, yes, a lot of players, but I think huge room to grow for all players. It's actually a lot of hard work. So you have to be last mile. You have to focus on customer education. You have to make sure that you are getting operating leverage, not because the ticket sizes are large, but you're doing multiple products with the customer. And you have to be as digital as you can. So you then create an economic model which actually serves the real middle end of the pyramid, which is the fattest piece, right? As you go down, it is the middle to the bottom end. It's a workable model. We have seen it, but it's hard work. That's how it is. So I think differentiation-wise, we are doing our best for the consumers. It seems to work. But we'll keep focusing on seeing what else they need.
Yeah, and just taking a look at the kind of raised recently, a lot of HNIs, Ramesh Damani, for instance, and Ashish Kacholia, etc. What does this 560 crore rupee fundraise mean when it comes to your overall capital adequacy?
So capital adequacy goes to 19%, which should by the end of this month, which is already passed, by the way. It's all growth capital. And I must say that we were really enthused because the quality of investors, the kind of fundraise, and their appreciation of what we had built and what we look forward to.
Right. The other thing I also wanted to talk about, what would you say, and I'm not talking about a quarter or two down the line, but let's talk 2 to 3 years or even 5 years. What's the growth runway looking like for you? Where do you think the maximum growth for Jana Bank is going to come in from?
See, in growth, I'll start with 3 things which are
Sure.
priorities. First, it has to be good growth, which means credit has to be really high standard. Second, it has to be growth which is around the consumer. So we don't have a target saying, let's make X product Y percentage. We're more focusing what do a consumer need, let's work with them. Then the third is, see, growth rate is not a challenge because every business line we are in grows upwards of 20%. Right? So if you take affordable housing growth rate for last year, for the industry, it was 25%. Right? So I think for us, growing is not the challenge. Then the other normal restraint for a business is, where are you present? So we are present in 24 states. We have 760 odd branches. We have 18,000 people. We have 45 lakh consumers. So I don't have a physical constraint, so to say. Digital, I'm fine. So to me, honestly, Aisha, it's less about how much can I grow. I just want to make sure I do good growth. I do it at a
Quality.
steady pace, yes. And I do it in a way that I'm actually making consumer feel happy that that's my primary bank. When they think of Jana Bank, that's their home bank. And if we reach that point, I think then we kind of tick all the boxes.
The one thing that I noticed, and right now you're getting the Q1 banking updates coming in, that the piece, the one important piece, of course, is cost of funding, and that's sort of falling for you as well. What's leading to this, and is there a scope for further decline here? Could that be a concern?
So yeah, I mean, for us, the past has been, conversion from a microfinance institution to a full-scale scheduled commercial bank. So obviously, we did get the advantage of raising public deposits and CASA. And as you know, CASA tends to obviously take the cost of funds down. And of course, cost of deposit also for us was much lower than the lending cost we were paying in the past. I think where we sit today, opportunity for us is really to grow a CASA business. So that's our top priority if you ask us. Cost of funds have been, I would say, it's if I remember right, the last year is up like 10 or 20 basis points. So I think cost of deposits have been more toppish in the last 1 year. We do think it will ease off as inflation is easing off. And for us, the opportunity of cost of fund reduction is certainly there as a percentage of CASA in our business grows. So that's something that we're focusing on, and it comes through our product launches and our branch expansion, because still consumers may not want to use the branch, but they want to know there is a branch.
Yeah.
So you really want a high street presence to make sure that consumers do feel, yes, I know this bank, it exists, and I feel more comfortable saying it, though they may still invite our banker home, or they'll still go digitally or through the call center.
Yeah, absolutely. Talking about branches, you have 760 currently. What number would you go to, and how quickly are you looking at growing it?
So I can tell you how we are looking at, first, we have a lot of the branches which are microfinance branches, mainly in the large cities. So over the last 2-3 years, as we have transitioned from an urban microfinance more to a rural microfinance, a lot of these branches we are converting into affluent area liability branches. So Bombay example would be, we had a branch in Sion, which was doing microfinance, that's moved on. We had a branch in Andheri, which is in a microfinance area, which is now moved to an affluent area. So our next bias is to really move all our metro cities and urban center branches from microfinance spots to bank branches. So while the bank branch size may not grow significantly, what will happen is our affluent presence for liability generation, for wealth management, for securities trading, etc., that will keep going up because we'll be transitioning these branches. So I do think we have another 1.5 years of work. as we kind of fully realign our branch network of 760 into the right spot. So it may not be a big jump in us, it will be a marginal increase, but it will really realign ourselves to the way we are.
So no concerns on Opex being elevated because of such aggressive expansion plans?
So Opex will increase slightly, but nothing elevated. Like I said, see, for a bank which is 5 years old, you have to measure what you do. So we've always done it in a measured way, saying, listen, first what we do, we have to do it well. We have to get some amount of recognition for it. And when we are ready, we launch the next product. So for example, we don't have credit cards. We don't have car loans. Yes, we will do that, but we will choose our pace and we will also go by customer choice. So for example, our customer base wanted two-wheelers first, rightly so. Now as we are growing, we can see now the four-wheeler demand is coming in. So now we are kind of starting imagining, hey, listen, now we're getting ready for the next phase. So starting at the bottom end and moving up the pyramid, we are somewhere in the middle now, and I still think there's a lot of work to do.
But tell me, we're talking about the times when behemoths like HDFC and HDFC Bank, now in their combined avatar, are, getting created in front of our eyes. And they also, I'm guessing, would be very aggressive in terms of penetrating deeper into the rural markets. How do you compete with such large banks? Or is that competition at all or not? You do your own thing.
How should I say it? Okay, first I think there are probably 500 odd very active NBFCs, and so everybody's got business. There are banks which all have business. So I think if we do want to get to the 5 trillion economy, the banks have to play a large role.
Absolutely, yeah.
And I can tell you that the penetration of credit still is probably a long way to go. Second, also remember, as the wealth effect grows, there will be a need for even more credit because people will have higher aspirations, will need to borrow more. So I do think that as of now, it's less worry about whom are you competing with. I think for us, it's more about, is my credit model suitable to the customers I'm addressing? Because I think addressing the right credit model can make a big difference of how you bring in the customer. Is my economic model right for us to be a profitable entity and yet serve the customer? So I think it's about the models you create. And I think if your model is good, you can compete with anyone. There is no reason why we would not be the bank which everybody will say, listen, look at their model and let's try be like them. And I think that's how we all think. If you just keep consumer focused, I think everything else will fall in place.
That's great, Ajay. Good to have you in the studios, and all the very best. Thank you so much.